Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bukre, and now I am welcoming you on your own YouTube channel Ekeeda. Hope you are watching my videos regularly and also finding benefit from that. Friends, today we are going to learn for CA course Advanced Accountancy, topic name Amalgamation of Companies, question number 1, which is on your screen. Let's see the question. Y Limited acquires the business of Z Limited. Y Limited acquires the business of Z Limited. So I can say Z Limited is a selling company and Y Limited is a purchasing company, whose summarized balance sheet on 31st of December 20x1 is as under. So balance sheet of vendor company, balance sheet of selling company is provided to you. Share capital divided into shares of rupees 100 each. 6% preference share capital 4 lakhs. I can say there must be 4,000 preference shares. Equity share capital rupees 8 lakhs. I can say there are 8,000 equity shares. Capital reserve P&L account 6% debentures. Interest outstanding on the above. Workmen compensation reserve expected liability will be 5,000. Trade payable 1,20,000. Goodwill, land and building, plant and machinery, patent, inventory, trade receivable, cash at bank and underwriting commission. Friends, out of this, underwriting commission is a fictitious asset which is a loss which will be shared by the equity shareholder. And reserves, capital reserve, P&L account, and here there is a reserve portion of 3,000. See, you can notice liability is 5,000 but reserve is 8,000. So I can say 3,000 ka difference is extra amount we have in reserve, which will be taken away by your equity shareholder at the time of amalgamation. Then they gave you Y Limited was to take over all assets, except cash. So I can say cash is not taken over. So cash will remain with the vendor company as a opening balance. And liabilities except for interest due on debenture. So look here, interest due on the debenture is 12,000. It is not taken over. So our responsibility is to discharge this 12,000 with the available cash and available fund. We will see that in a meantime. 2 lakhs rupees, 7% debentures rupees 100 each in Y Limited for the existing debentures in Z Limited. So what they will issue? They will issue rupees 2 lakh 7% debentures of rupees 100 each in Y Limited for the existing debentures in Z Limited. So these debenture holders which are here 6% debentures, for them new debentures are given. For this purpose, each debenture in Y Limited is to be treated as worth rupees 105. That means issuer is saying my debenture is worth rupees 105, but importantly existing debentures are taken over at their book values. Y Limited was to take over all assets except cash. So cash is not taken over. And liabilities except interest due on debentures. So interest due on debenture is also not taken over. And to pay the following amount. So what they will pay to us is provided to you. Rupees 2 lakhs 7% debentures of rupees 100 each in Y Limited for the existing debentures of Z Limited. For the purpose, each debenture of Y Limited is to be treated as worth rupees 105. So these debentures what they are issuing at a premium. That means 5% extra amount will be added over here. That is, it will become 2,10,000, that is issue price. So I can say my debentures also are taken over at their respective revised value that we will see. For each preference share in Z Limited, rupees 10 in cash and 9% preference share of 100 each in Y Limited. So for their existing preference shareholder, they will be given rupees 10 in cash and 9% preference share of rupees 100 each in Y Limited. So it is a payment for preference shareholder. So this point will help you to find out your PC. For each equity share in Z Limited, rupees 20 in cash. For whom? For each equity share. So it is a payment for equity shareholder. Rupees 20 in cash and one equity share in Y Limited of rupees 100 each, having a market value of rupees 140. Market value is 140. So they have issued it for equity shareholder. So I can say it is also part of PC. Next, expense of liquidation of Z Limited are to be reimbursed by Y Limited to the extent of 10,000. That means they are ready to reimburse you, but maximum amount what they can reimburse is 10,000. The actual expenses amounted to rupees 12,500. So what vendor company will do, to the extent of 10,000, purchasing company account will be debited. Amount extra paid by them, that is 2,500. For that they will debit realization account, right? Y Limited valued land and building at rupees 5,50,000 and machinery at rupees 6,50,000, patent at rupees 20,000. Assets values are revised, so it is definitely a purchase or acquisition. So this will be taken care by the purchasing company. No role is there for your vendor company for this. Required journal entries to close the books of Z Limited and journal entries in the books of Y Limited to record the acquisition. So only entries they want. But before you proceed further, you need to work out your purchase consideration. Let us work out purchase consideration. Friends, I am ready with this format. In this format, I need to write all items of PC, that is purchase consideration, which is received for the shareholder. For that purpose, I need to see the question again. In your point number 2, they mentioned for each preference share in Z Limited. So they are discharging whom? Preference shareholder. What they will get? Cash rupees 10 for every share and 9% preference shares of rupees 100 each in Y Limited. So it is a payment for preference shareholder. For preference shareholders of Z Limited, firstly they paid you a cash. So A, we got the cash. They are saying for each preference shares, so look at the balance sheet. Preference share capital is 4 lakhs. It is of rupees 100 each. I can say there are 4,000 preference shares. So for every share they will give you 10 rupees in cash. Of course, for 4,000 shares into 10 I will get the cash. So I am writing that. Firstly, they will get the cash. For 4,000 preference shares at the rate of rupees 10, they will get 40,000 in cash. Next amount what they will get preference shares in Y Limited. They will get equal number of preference shares in Y Limited. $4,000 preference shares of rupees 100 each. So your amount comes to 4 lakhs. So total PC for preference shareholder is 4,40,000. Number 2. Next payment is for equity shareholder. Let me show you that. Information number 3 says that for each preference share, information number 3 says that for each equity share in Z Limited, rupees 20 in cash will be given and one equity share in Y Limited of rupees 100 each, having a market value of rupees 140. Sir, when they are saying market value of 140, that means they will issue us at 140. So these shares they have issued at a premium, right? So our calculation will be for equity shareholder, I will get two elements, number 1 cash and number 2 equity shares. Let us write that. For equity shareholder, they will get number 1 cash. So cash. For each share they will get rupees 20 in cash. Look at the balance sheet. Equity share capital is 8 lakhs. Per share amount is 100. So I can say there are 8,000 shares. So based on 8,000 shares at the rate of 20 you will get the cash. 1,60,000. Next what they will get? They will get equity shares in that company, in purchasing company, which is Y Limited. They will get 8,000 equity shares of 100 each at rupees 140. Friends, they are giving their shares at rupees 140. So when they issue the shares to the vendor, they will say that in this 140, share capital is 100 and extra amount is securities premium. Share capital is 100 and extra amount what they have charged will be a premium 40 rupees, but it is for the issuer, not for the receiver. As Z Limited is receiving the PC, for them important is 140. They will not see the breakup. But Y Limited is issuing, so while recording their entry, they will say capital amount is 100, but premium is 40. In this way, they will do the accounting. Let us take the total of PC now. So your total PC we have to calculate now. This is how we have calculated the PC, which is 17,20,000. We need to record entries to close the books of vendor firm, that is books of Z Limited we have to close. Let us pass journal entries for that. Friends, we are ready with our journal format. Let us write all the entries step by step. First and foremost, what you need to do? You need to close the balance sheet of the vendor and transfer their amounts to the respective account. So let us start that step by step. Look at the asset side of the balance sheet. Goodwill, land and building, plant and machinery, patent, inventory, trade receivable. These all will be transferred to the realization account. So our entry will be realization account debit to all these assets. Cash will be a separate account because it is not taken over. Underwriting commission we will debit to the equity shareholder account. Here preference share capital I will transfer to the preference shareholder account. So our entry will be preference share capital to preference shareholder. Equity capital reserves and PL account will be shifted to equity shareholder account. 6% debenture interest outstanding will be transferred to the realization account on credit side. Workmen compensation fund 5,000 we will transfer to realization account and 3,000 will transfer to the equity shareholder. Trade payable we will transfer to the realization account. In this way, step by step we will pass the entry. Let us begin with the asset side transfer first. Friends, you can notice the entry realization account debit to each of these asset account is credited being assets transferred to realization account. So simple entry we have done. Let us see the next entry. For cash account there will not be any entry. It is just opening balance of bank account. Underwriting commission will be shifted to the equity shareholder. So I can say equity shareholder account debit to underwriting commission. Friends, you can notice our entry equity shareholder account debit to underwriting commission being underwriting commission transfer to equity shareholder account. So in this way we have closed underwriting commission. Let us see the liability side. Preference share capital I will transfer to the preference shareholder account. So our entry is preference share capital account debit to preference shareholder. Friends, our entry is preference share capital account debit to preference shareholder being preference share capital transfer to preference shareholder account. Equity capital, capital reserve, PL account and workman compensation fund of rupees 3,000 will be transferred to the equity shareholder account. So these account will be debited and equity shareholder account will be credited. Friends, you can notice equity capital account debit, capital reserve account debit, PL account debit, workman compensation reserve to the extent it is profit transferred to the equity shareholder, to equity shareholder account credit, being equity share capital and reserves transferred to the equity shareholder account. So in that way, we have completed that entry. Let us see the remaining amounts. Debentures, interest on debenture, workman compensation liability, 5,000, and trade payable, we will transfer to the realization account. So all these accounts will be debited, realization account will be created. Friends, PC due recorded entries Y limited account debit to realization account. So let us record PC received. Various items I will copy from my net payment calculation. Let me show you that. We have got cash, this 40,000 and this 60,000, all together 2 lakhs rupees cash we got. Preference shares in Y limited we got, and we also got equity shares in Y limited. So these three accounts will be debited. Which one? Cash account debit, preference shares in Y limited account debit, and equity shares in Y limited account debit to Y limited account will be credited. Friends, you can notice the entry. It is PC received, cash or bank account debit, cash we are saying cash or bank. Preference shares in Y limited account debit, equity shares in Y limited account debit to Y limited, being PC received. Simple, it is copied from your net payment. Now I will follow all instructions which are there in my question. Point number 1 says that they have discharged debenture holder. For this we will not pass any entry, but for preferential holders whatever we got, we will give it to the preference shareholder. So our entry will be preference shareholder account debit to this mode of payment account as per your net payment. Friends, our entry is preference shareholder account debit to cash or bank and to preference shares in Y limited account, being settlement of preference shareholder. Let us see how much amount was due to them. As per entry number 3, how much amount is payable? 4 lakh, but we overpaid them. We paid them 440. So whatever extra paid will be debited to realization account and credited to the preference shareholder. Friends, you can notice the entry realization account debit to preference shareholder account 40,000. Whatever overpaid is credited to the preference shareholders account and debited to the realization account. So it is a loss basically to the company which is debited to the realization account. Let us see what happens next or whatever additional information is given. In this line, after the balance sheet, you can notice they have taken over all assets except cash and liabilities except interest due on debenture. So this interest we need to pay. This was earlier transferred to realization account, and now when we are paying, we will say realization account debit to cash or bank account. Amount will be 12,000. Friends, you can notice our entry realization account debit to cash or bank, and our narration is being outstanding debenture interest paid. Let us see what further is given. Point number 3 says about PC received for equity shareholder. Importantly, this PC will be paid only after you complete all other transactions. So for that, we'll wait and see. Expense of liquidation of Z Limited are to be reimbursed by Y Limited to the extent of 10,000. They are saying actual expenses amounted to 12,500. So our entry will be realization account debit 2,500, purchasing company, that is Y Limited account debit 10,000 to cash or bank, and then one more entry to receive the amount. So I will pass all those two entries. Friends, our entry is realization account debit 2,500, which we will bear. Y Limited account debited 10,000, which they will bear, they will reimburse to cash or bank, which is spent 12,500, being realization expenses incurred and 10,000 charged to Y Limited. Now Y Limited will reimburse our amount, so I will say cash or bank account debit to Y Limited account. Entry number 12, cash or bank account debit to Y Limited account, being realization expenses reimbursed by Y Limited. Let us see the next. Hereafter information is that how they valued your assets and liabilities. For that we will not pass any entry. For us all entries are over except number 1, closing of the realization account, and number 2, settlement of equity shareholder. So these two entries will come. For that purpose, in working note I need to prepare a realization account. Friends, I have prepared a simple format of account where realization account is prepared. I will not write all details because they are not asking you that, but I need to know the profit or loss. So what I will do, I will simply post all the entries. So I will record everything from our journal, and then I will come back with the profit or loss on that. So let us record all entries either on debit side or on credit side depending on the entry. So I am recording all those entries. Entry number 1, you can notice realization account is debited with 15,80,000 on debit side. $15,80,000. Entry number 2, there is no realization account, so we will ignore this. Entry number 3, no realization account. Entry number 4, no realization account. Entry number 5, realization account is created with rupees 3,37,000. Entry number 6, realization account is created with 17,20,000. Entry number 7, no realization account. Entry number 8, no realization account. Entry number 9, realization account is debited with rupees 40,000. Entry number 10, realization account is debited with rupees 12,000. Entry number 11, realization account is debited with rupees 2,500, so I am debiting. Entry number 12 does not have anywhere realization account, so that will be ignored. Let us close our realization account and try to find out what is your profit or loss. Credit side total is 20,57,000. I will minus all these amounts. This is the realization profit which will be transferred to equity shareholder account. Friends, this entry I need to record realization account debit to equity shareholder account. Friends, my entry is realization account debit to equity shareholder account, being realization profit transfer to equity shareholders. It is with the help of working note number 1. सो वर्किंग नोट नंबर 1 के हिसाब से हम लोगों ने प्रॉफिट रिकॉर्ड किया है. Now whatever are your remaining items, so what are the items remaining? We have only cash or bank, and we have equity shares in Y Limited, which was received as a PC. But cash account, we know it changed its figure very oftenly, so we have to prepare a small cash account to understand how much cash balance is there which can be handed over to the equity shareholder beside the equity shares in Y Limited. So I will prepare a simple cash or bank account. Friends, I am ready with cash or bank account, which is simple format. Here once again I will just debit and credit the amount. Let us write firstly what is opening balance. This cash balance which was not taken over, rather it is cash or bank balance which is not taken over, I will debit to the account. Brought down amount is 70,000. Now I will simply debit and credit the account based on our entries. Let us see that. Friends, look at entry number 1 and 2. There is no cash account as such, so ignore. Entry number 3, 4, 5. There is again no cash account. Entry number 6, no cash account. Entry number 7, cash account is debited with 2 lakhs. Entry number 8, there is a cash account which is created with rupees 40,000. Entry number 9, there is no cash account. Entry number 10, cash account is created 12,000. Entry number 11, cash account is created with 12,500. Entry number 12, cash account is debited with 10,000. In this way all entries are posted. So I need to see how much cash balance is there which can be given to the equity shareholder. So I will close the account and I will find out the difference which can be shifted to the equity shareholder. Debit total is 2,80,000. I am getting a difference of 2,15,500. This will be handed over to the equity shareholder. So our entry will be equity shareholder account debit to cash or bank for cash given away to the equity shareholder. Thereafter, whatever equity shares we have, that also will be given. So in short, 2 items will be given to the equity shareholder. Equity shareholder account debit to cash or bank and to equity shares in Y Limited. Let us record that entry. Friends, here I need to know what is the amount of equity shares in Y Limited are given to the equity shareholder. So firstly, I need to check my PC calculation. In my PC calculation, I have seen that 11,20,000 worth of equity shares in Y Limited are received for equity shareholder, so it is given away. Friends, it is the last entry, equity shareholder account debit to cash or bank and to equity shares in Y Limited account. Being settlement of equity shareholder. In this way, your vendor company's book get closed. But let me check whether my equity shareholder account get tallies or not. If it get tallies, that means technically we are correct. So as a working note, again we will prepare equity shareholder account now. Friends, in this rough account, I will once again debit and credit the account. So I have to once again check my entries where equity shareholder account is affected. Friends, notice this. Entry number 1, equity shareholder account is not there. Entry number 2, equity shareholder account is debited. We have debited this 40,000 in equity shareholder account. Let us see the next entry. Entry number 3, equity shareholder account is not there. Entry number 4, equity shareholder account is created with 953,000. Entry number 5, equity shareholder account is not there. Entry number 6, no equity shareholder. Entry number 7, equity shareholder account is not there. 8, equity shareholder account is not there. 9, equity shareholder account is not there. Entry number 10, no equity shareholder. 11, equity shareholder account is not there. 12, equity shareholder account is not there. 13, equity shareholder account is created with 420 to 500. And last entry, 14th, equity shareholder account is debited with 1335,500. Your equity shareholder account is tallies 1375,500. This account we have prepared just to ensure whether we are correct or not. Equity shareholder account will get tally. Friends, it is what half done. Our next part is recording the opening entries in the books of purchaser, for which we will pass the entries now. Friends, I am ready with the journal format. Date will be 2000 X1 December 31st. Friends, first 3 standard entries will come. Number 1 for recording the business PC. Number 2 to take over the assets liabilities, and number 3 to discharge the PC. Thereafter we will see all other entries. First 3 entries will go step by step. Entry number 1 to record the business purchase. Entry number 1 will be business purchase account debit to liquidator of Z Limited account. This entry will record at PC amount, which is 17,20,000. Friends, first entry is done. Business purchase account debit to liquidator of Z Limited. Second entry is to take over assets and liabilities. Be careful. Here I will take over all assets at their aggregate values except goodwill. Goodwill or capital reserve will be a balancing figure. I will take all liabilities at settlement value. So I need to work out the settlement value also of the liabilities taken over. So let us go step by step, keeping our mind cool. Let's see your informations. They are saying Y Limited was to take over all assets except cash and all liabilities except interest. Aram se. Goodwill I will not consider because it always get revalued. Right? Other assets, let me check whether any aggregate value is given. In this last line you can notice how they valued their assets. So I will record all these assets debit first and then I will go back to the balance sheet again. Friends, I debited 3 assets whose revised values are given: land and building account debit, plant and machinery account debit, patent account debit. Besides that, I have to take all other assets at their book values. Land and building, plant and machinery, patents recorded. Now I will debit inventory account, I will debit trade receivable account. I have recorded assets taken over. One line I am keeping blank so that I can record goodwill or capital reserve as the case may be. So one line I am keeping blank and then I am writing 2. While I am recording the liabilities taken over, I will take their settlement values, not their book values. Look here. They are saying rupees 2 lakh 7% debentures of rupees 100 each in Y Limited for the existing debentures holders in Z Limited. तो इनके लिए हम लोगों ने नया डिबेंचर दिया है. For the purpose, each debenture of Y Limited is to be treated as worth rupees 105. That means 2 lakhs rupees ka debenture we gave at 105%, means the aggregate value will be 2 lakhs plus 5%. Or I can say rupees 2 lakhs multiply by 105 upon 100. So I will record that. Friends, you can notice 6% debentures are taken over from them and the aggregate value will be 2,10,000. Why? Because we are going to discharge them 2,10,000. Right? Let us see the next liability. Preferential shareholder is a part of PC, so it will not come in the liability taken over. Equity shareholders ka payment also will not be a part of liabilities taken over. Expenses payment will be considered separately. Now, all remaining liabilities I will take at a book value. Sir, what are the other liabilities? This too we have considered, this we have not taken over. Workmen compensation reserve liability 5,000. Workmen compensation liability account 5,000 we have taken over. One more liability we have taken over, trade payable 1,20,000. Friends, cannot I say I have recorded net asset taken over? These are the things what I have got by paying this amount 17,20,000. So business purchase account will be now credited. So automatically my aggregate price of PC will be compared with aggregate values of assets liabilities taken over. Let me firstly write business purchase account on credit side. The difference will be goodwill or capital reserve. Now I will compare debit side with credit side and I will find out what is the amount of goodwill or capital reserve is there. On debit side, your total is 15 lakh 50,000. On credit side, your total is 20 lakh 55,000. So there is a difference on debit side of rupees 5 lakh 5,000. This difference is there on debit side. By comparing these two sides, this difference I will debit to goodwill account. Goodwill account is debited as a balancing figure. Right, so here I compared my PC with agreed values of asset liabilities taken over. So narration will be simple, being assets and liabilities taken over at agreed values. In this way, I have taken over assets and liabilities. Third entry is to discharge the PC. Entry number 3, we are discharging liquidator of the vendor. Liquidator of Z Limited will be debited to whatever modes of payment. So I will see my PC calculation. This is our mode of payment. So I will say liquidator of Z Limited account debit to cash or bank, to preference share capital account, to equity share capital account, and to securities premium. So I will take every amount from here. So friends, my entry is liquidator of Z Limited account debit to cash or bank, to 9% preference share capital account, to equity share capital account, and to securities premium account. Based on our PC calculation, 4,000 preference shares of rupees 100 each, 8,000 equity shares of 100 each, 8,000 equity shares on that premium is 40 rupees. In this way, we have settled 17,20,000. These are the 3 basic entries we have recorded: business purchase, takeover of asset liabilities, and thirdly, settlement of PC. Thereafter, what additional things we need to do? We have to follow the question. They are saying we are discharging their debenture holders by issuing 7% debentures. For that, we have considered our own debentures at 105. So aram se we are settling 6% debentures of that Z Limited. In your entry number 2, we have credited that. This will be debited and I will credit our own debentures. Friends, our entry is 6% debentures account debit 2,10,000 which were taken over, now it is cancelled. To 7% debenture, our debenture face value is 2 lakhs, but it is treated as 105, so 5% premium. To security premium account credit 2,10,000, being 6% debenture holders of Z Limited settled. So we have settled their debenture holder. What more thing we have to record? Let us see additional thing to be recorded. Notice your information number 4, where we are reimbursing them 10,000 of the expenses. For us, it is a capital loss. It will be debited to the goodwill account and credited to the cash or bank account. So entry number 5 will come. Friend, our entry is goodwill account debit to cash or bank, being liquidation expenses paid for Z Limited. In this way, we have paid their expenses. There is nothing more to be recorded in this question. Requirement is only journal entries. So let us not talk about the balance sheet. I just hope this easy question you must have understood. Still, if you have any doubt, please put in the comment box. We'll try to resolve your queries at earliest. Thank you for watching the video, students. But please, before I close the video, I request you to like and share our channel Ekeeda. Also share our channel with your friends so that they will also get the benefit. Thank you once again. God bless you, student.